G'day everyone, Damien here from Integrity Property Education. If you're looking for some property investment strategies, advice, information, you've come to the right place. Today's blog video is about the property bubble. Is there a property bubble in Australia and is it going to pop? Right, the first thing we need to understand is that there has been property bubbles elsewhere in the world. And yes, they have popped. The main example really is the US. And we did see a similar effect follow on in the UK because their banking sectors are very closely tied together. Now, what happened in the US? Well, what happened in the US actually is quite interesting. The government over there set up two banks and started lending money to people who the other banks wouldn't lend money to. So these two banks were called Freddie Mac and Fannie Mae. And they lent money to the people that couldn't normally get loans. Now that was interesting. Now it was with good intentions, of course. They wanted every American to be able to realise the American dream of having their own home. So they started lending them money. Now at this time when the idea came up, the property market was very strong and the economy was very strong. So they started lending money to these people. What did that do to the property market? Well, what it did to the property market is it reduced the number of renters and increased the number of buyers. So the rents basically started going down or didn't move at all, and the buyers went through the roof. That in turn put house prices up. So, great so far, right? All of these people are able to buy houses that they couldn't buy before, and the property market's going up. But then we started to have some problems. Inflation then started to take off because there were so many people buying houses and so much money flying around the economy. As inflation started to go up, the American Reserve Bank had to put interest rates up to slow down the economy. Now when this happened, it was the beginning of the end. Why is that? Because these people that they lent money to had these loans called non-recourse loans. Now a non-recourse loan meant basically the only security on the property was the property itself. Or the only security on the loan was the property itself. And if they couldn't afford the mortgage anymore, all they had to do was leave the keys in the door, ring the bank and say, sorry, I'm out. So this happened. As interest rates went up, all of these people started foreclosing on their mortgages. And we went from a situation where we had an oversupply of buyers pushing prices up to now an undersupply of buyers and mortgage foreclosures everywhere. And it put the mortgage market into free fall. All of these foreclosures flooding the market and house prices started tumbling down quite dramatically. Now behind all that there was also this thing called the subprime crisis. Now these mortgages that were lent under non-recourse were referred to as subprime mortgages. Why is that? Because they were non-recourse. Subprime meaning less than prime, they were not very good securities. But they were selling them and trading these mortgages as a security behind the scenes in a complex arrangement of investment schemes. What then happened when the foreclosures went down and had to claim all these securities became worthless because house prices dropped below the value of the mortgages, and then we had the big crisis that spread across the world and became the global financial crisis. Now during all of this, what happened in Australia? Well, what happened in Australia is nothing. That's what happened in Australia. Because in Australia, we didn't lend money to people who couldn't afford to pay it back. We only lent money to people who had good incomes, accessible surplus incomes, and were able to muster deposits. So when the rest of the world started going down in this global financial crisis, Australia's economy actually held pretty strong, in particular our housing market. Now we did get attacked in other sectors due to the second, third order effects, but our market held strong. So if you think there is a property bubble in Australia and you think that the market is going to collapse, ask yourself this question: why didn't it collapse during the GFC? If ever there was going to be a great test of our Australian property market, it would have been during the GFC, right? So we survived. Why is that so? Well, as I said, we don't lend money to people who can't afford to pay it back in Australia. Now, one of the other arguments that people put out about the Australian property bubble theory is they say that the Australian average house price has never been a greater multiple of the Australian average income. Now that is factually true. So what they're saying is that the multiple of how many years income you need to pay to buy a house has never been so great. And as I said, it's factually true. But what those people don't understand is that the lending practices have changed. Once upon a time, you could only borrow money for 15 years and you had to pay it all back in that time under a principal and interest loan. Now, if you've got to pay the same amount of money back in 15 years as opposed to 30 years, then you're going to have a larger principal amount to pay back in order to get it paid down. This is in turn going to consume your surplus income that the bank assesses you have, and they're not going to lend you anywhere near as much money. So all of the buyers in the market, when there was only 15-year loans, were restricted to a smaller multiple of their average income. Does that make sense? So when there's only 15-year loans, people could only borrow a smaller multiple of their income, therefore the market was capped as such. But now we have 30-year loans where you've got 30 years to pay the same amount of money back. Therefore, your disposable income can borrow much, much more money to borrow for a house, right? Because you have got longer to pay it back. You've got twice as long to pay it back. Therefore, the capacity to buy has gone up and the competition in the market has occurred and prices are now at a point relative to wages based on how much people can borrow. And then on top of all that now, we've got two other things. We've got interest-only loans where basically you don't have to pay the money back at all, you just got to service the interest. And we also have these reverse mortgages where people are capitalising mortgage repayments by just adding them on top of the loan. So really the banks basically worked out that they make money by charging people interest. So why wouldn't they want you to pay interest to them as long as possible? That's how they make their money. So now people can borrow money for a longer period of time, therefore they can borrow more money on the same income, and that's why we have this greater multiple. There is no property bubble in Australia, ladies and gentlemen, and if you think there is and you're stopping yourself from buying property, well, that little obstruction in your mind is really going to disadvantage you financially. You've got to be in it to win it. Go out there, invest in property, make sure you know what you're doing, of course, but seek to understand and don't listen to everything you hear on Today Tonight in the Current Affair or in the brew room at work, because generally those people aren't experts in the field, they're just regurgitating some other rubbish that tends to sell newspapers or sell advertising space. Alright, that's it from me today. I hope you got something out of that blog video. If you liked it, please like our page, share, subscribe to our YouTube video, get the word out there, let's share this education so people can make better decisions about their investments. That's it from me. Until next time, cheers.